Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. Just a little disclaimer, nothing should be construed as financial investment advice. Just my opinions on the markets, read more below. Let's get in, let's get into the just sort of weekend news stuff going on. These are things I just thought I wanted to share with you. Right now, I mean, I know the economy's bad, but this is why we're due for a crash. Now, I think there's going to be a bounce first right now in the markets, but look at this. Workers' confidence has dropped to a new low. U.S. workers in the U.S. are now feeling worse about their finance, job prospects, and career outlooks than they were during the early days of the pandemic. So you look at this, really bad, sentiment's horrible. This is right for some sort of correction. And then let me see. The other thing I wanted to send to you was I thought this was interesting about the Fed, and he did his propaganda thing. Is the Fed forecasting stagflation? The Fed left its interest rate unchanged, 4.5% as expected. Central bank now expects U.S. GDP growth at 1.7% in 2025, which is down from 2.1%. PCE inflation at 2.8, that's up. So you've got a declining economy from 2.1 to 1.7%, but rising inflation. So unemployment rate is projected to reach 4.4, that's up from 4.3%. Lower growth, higher inflation, unemployment, that's stagflationary. And the other thing is, right here, it says it's going to have two rate cuts this year. So two rate cuts here. So it looks like the Fed, as I said, I think there's going to be a massive stimulus coming. And then look at this. Consumers' real income expectations over 1 to 2 years hit the lowest level in the Michigan survey's 47-year history. Income expectations adjusted for inflation were not this depressed since the great financial crisis, going to 2007 to 9. So yeah, they want to get these type of sentiment in so we can. And of course, you can see, look at this, America's top grocery store laying off employees left and right. This is Kroger right here, Kroger. And one thing that was interesting here, look at this, grocery store chain laid off employees in February and just issued another round of roughly 200 layoffs. So they just laid people off last month, and now 1 month later, this is March 23rd as I'm doing this. They're issuing another round of layoffs. And it's not like this is like a luxury brand thing. This is stuff people need. People need groceries. So yeah, I do think people are buying less at the store. You know, but I think yeah, this is what it is. I think people are buying less at the grocery store. And not only that, I think I've been doing this when they go to the grocery store. If they only go for two items, they just pick those two items. They're not going there and be like, oh, this would be cool. This would be cool. Let's look around to see if anything more I want. No, they're just buying those two items and leaving. And that hurts sales. Think of all those extra. So grocery stores probably laying people off, cutting hours of employees there. So it's not just grocery stores. Look at this. FedEx, latest company to sound the alarm on the US economy. And remember, because they're legally liable to tell the truth during the conference calls, these are when companies are actually honest. They cut its profit outlook for the third straight quarter. Continue weakness and uncertainty in the U.S. industrial economy. Industrial economy. I thought we were supposed to bring manufacturing back. Yeah. Well, don't hold your breath. Weakness continued to pressure FedEx higher margin business to business volumes. So there it is. The high margin stuff. People aren't buying it. They don't need it and they can't afford it. Fewer shipments and lower weights continue to hamper results. This is adding uncertainty to demand. Well, it's not uncertainty, it's lower demand. So look at this. Fiscal 2025 sales slightly down on a year-to-year basis compared to December, where they said they were going to just be flat. Adjusted profit expectations came down. And then look at this. FedEx will spend less this year, calling for capital spending of 4.9 billion compared with the previous expectation of 5.2 billion. Well, if they're going to cut their capital spending, that's bad for the economy. So, yeah, that's not good for the economy. If they're not going to invest, it's like if I'm going to put 5 million into a plant and then I'm like, nah, I'm only going to put 2 billion. Does that inspire confidence that I'm going to be using it as much as I said 3 months ago? No. So as you can see, they're cutting capital spending, they're cutting investments, their sales are supposed to be actually down. And look at this. This is just one thing that really concerned me. DoorDash and Klarna partner to offer eat now, pay later. This is why I said, this is why Kroger's laying off people. They want to blame it on a merger, but people can't afford to eat. DoorDash is now having payday loans. So right here, whatever this is, and DoorDash are joining forces. Buy now, pay later. And just in terms of like just idiocy and just new fighter jet. Look at this. Boeing. Just in case I wondered, let's see, it is Boeing, the F-47. Yeah, geez, wonder. And they chose based on meritocracy. Oh yeah, Boeing, which faced safety concerns, including 737 MAX crashes, door plug incidents, allegations of lax safety and quality control, prompting increased security calls for. So there it is. Yeah, our fighter jets are now from the most unsafe company. So let's go to other stuff now. Let's just go on. This is why our market will crash. So right now, hmm, Dow Jones. I'm going to S&P. Look at that right there. It's up 1 month. It's actually down 5.2. If you actually look at it, it's come down here. Wonder if it's going to come 2014. If it comes up for a third time, maybe you could do a triple top. But if it hits this again, I think it will go up because there's no quadruple top. But yeah, stock market, this is the last year where there can be any gains. I think there'll be a big stimulus and that will push the market up. I think gold will outperform it, but let's look at the GLD chart. Let's look at Max. And if you look at it, that's not actually that bad. It's like comes up, comes up. It's not like the Kiko chart where it just went straight up. Like, like look at that right there. 2011, that's just flat. Look at that line. And see, this is where I think we are. See, look at that. June 2011, then it just went straight. 150 to 113, 183. So that 174. It's finally up, but let's look at SLV. I just like looking at charts. I'm not a chartist. Look at that. Right there, straight. So if you look at the silver top, like look at that. That is a straight line. And then look at that straight line. It's one reason I sold a little bit. Just look at that. That's just a straight line to 24. As you can see, it came back, retested, and now it's broken above this. It's at 29, 30, 30, 50. So pretty excited. As I said in previous videos, silver, this is SLV, so this isn't on this chart. But the price before the next topping period, now it doesn't mean I think a correction could come. It could be anywhere from a couple of months to a couple. Let's go to GLD. How gold can go. It could be a month. It could even be just a couple of weeks. Well, let's do a 6 month or a year. Just do a 1 year. So if you look at this, going around July 2024, do a 5 year. Well, going 2023, look at that. 154, and that's when it came up. And January, and then February. Then it just kept basing, and then it really broke out in March, August, all the way up here. And so what I think will happen is it could just sort of come back down here, test a little, which would be around 2400, and I think that would come quickly. Or it could just sort of go around this level, 26 263, and just sort of go up and down and then go up again. But I think if it's sort of a sideways down, like here to like the ETF in terms of price, like right here, I think that'll be like a couple of months, 3 or 4 months, and then it would just make its final blast higher. But that's what I think will happen. I don't think it will be a anything significant, but sell the targets. Just go to Kiko. I'm looking at when's my next profit opportunity where I'm just going to lock in some profits and sell some stuff, or, adding stop losses. And it's simple. And I would say it's simple. Let's do a all year. It's 33 here. It's right around when it breaks 40, starts approaching 50. That's when I'm gonna maybe add some stop losses depending on the juniors I have and where they are. I might take some profits depending on, like, I have some juniors, they're 30 cents and some are $3. I might just sell half and just lock in profits and then put some stop. I don't know exactly what I'm doing, not financial investment advice, but I already, gold hit 3,000. Me personally, I'm not telling you what to do, but I thought it was a good opportunity early last week. I told you on this channel, sold a little bit of the royalty and streaming positions I have, big dogs, not, and I just did that to pay off loans, pay off all the loans, family's debt free, don't have to worry about anything right now. And so the next really profit opportunity, where it's a house or where it's something, anything, a house where it's paying bills, paying off. Let's say you were up to the eyeballs in debt, and let's say you were me, like following my channel, actually doing it, just as an example, not investment advice. So you did 3,000. Let's say you had credit card, auto, the whole thing, and you're like, all right, I can get rid of the credit card debt. I can get rid of some of the credit card debt. Like, let's say you did that, and you're like, auto and house, I'm okay for now. The next opportunity to really probably around here, and then add some stop losses. Because if this breaks, the reason why I say add some stop losses is if this breaks 50, I think it's either going to go to two things, probably 60 to 5 to 75, or it's going to go to 150. And I just keep adding stop losses. So say it doesn't break 65 and then it comes back down, you just have those automatic sell orders. And it's going to be another 4 to 5 year bear market. So either pay off a debt or buy a home, do something you need. So in terms of the market, let's get into the fear and greed index. You can tell if you look at it, I follow this psalm. I don't bring it completely, but you can tell the fear is sort of coming. Remember it was around here, the E and the F, the X, but now it's coming. I think it's going to go to fear, and it's going to, as I said, it's due for a bounce. Just look at this, extreme, extreme. I had greed there, but it's really, going less. So that's all. Let's look in but there is fear, but the fear is waning, as you can see. Let's do one. Let's see what big economic data is coming up. Monday, Chicago Fed, S&P Global, Schiller Price Home. I'm really going to be watching that. Durable goods. Yeah, it's going to be a lot of data coming this week. GDP Thursday. That will be interesting. Pending home sales. A lot of good data, Kansas City, and then CPE. So that will be interesting. Lots of good stuff coming up. So if you like this video, hit that like button, subscribe if you haven't. I'll be covering it all. I'll try to do a video every day this week. Maybe I won't. I will cover all the data though. Let's say I decide not to do one tomorrow, I'll do one Tuesday. I'll cover Mondays and Tuesdays. So hit that like button, subscribe if you haven't. And thank you if you've listened all the way through. And don't forget, not financial investment advice. I'll talk to you soon. See you next video.